Coming up in this show, Matt has a great new segment for you, Inplay. He's going to show you his great approach to trade identification, and that is when to act. Ivy's going to show you a trade idea in Raytheon, plus how he uses the market condition monitor. I'll show you our Give the Gift special, non-recurring memberships where you give a gift and we send you a gift. And then I'll bring you my analysis on the stock market and the bond market, a little bit different today, as I show you treasury charts, the stock indexes, even some look at inflation. I'll bring you our ranking systems of the top traded stocks, and I'm going to ask Slim AI how to use that ranking system. You're going to be fascinated by that.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward to what might happen in coming weeks. And we have some great things to show you as we look ahead. But first, get acquainted with askSlim. You can go to the top of the website under free stuff and sign up for the SIR Lite. If you're brand new, you're going to love that because you get our free S&P 500 analysis every single day. Matt does a great job on that. Make sure you check out Slim AI on the bottom right of all the pages. If you're brand new, you're going to talk to our greeter down there, and you can ask questions about askSlim content, things like that. He's not going to give you analysis if you ask that, but he'll teach you everything you need to know about the markets, trading, all of that stuff. I mean, he's just amazing. On YouTube, subscribe to this channel, click the notification bell, and do like this video, give it a thumbs up. And on X, follow me at askSlim. Any questions you have, write to Matt at askSlim.com. This is the new Inplay segment. Matt's going to share his approach to multiple time frame analysis. He did a great video here, which has 12 symbols on it in our member section. What we did was take a section out of that to share with you, looking at FDX and UNG, that's Federal Express and natural gas, and learn when a trade is in play. Matt, show him this.
Hello, market enthusiasts. This is Matt with askSlim. Today, I am continuing with a new video from our askSlim Inplay series, which we recently launched. The objective of these technical analysis videos is to map out key levels for directional moves and translate them into clear if-then scenarios and define checkpoints for re-evaluating the bias. Today's lineup includes 12 symbols, 6 from my bullish watch list and then 6 from my bearish watch list. In each video, I review the symbols covered previously to see whether the directional bias has changed, whether the key levels are still actively in play, or whether they remain in play but are stalled by shorter-term counter-trend momentum conditions. I also look to introduce 2 to 3 new symbols in each video. All right, let's get into the analysis. We will start with FedEx. I initially reviewed FedEx on 11/6, and today is December 4th, which is a follow-up review. With FedEx, as I mentioned, we reviewed it initially on 11/6, which was right around here. And as it is on our bullish watch list, and there's really no change in the overall analysis for FedEx. Its overall directional bias is still positive. We are looking for the intermediate fib projection zone to still be reached. So what I'm showing you here is a multiple time frame chart. And with our in-play analysis, what we do for each symbol is we want to define that directional bias, mark the projections and the key levels, determine when the move is active or pending, and specify what triggers the next swing if it is not active yet. And then we're going to highlight the reevaluation level or condition that would require updating the in-play map and projection. So as I stated, there's really no change in FedEx. It has moved up nicely over the past few weeks, and it's coming up near that intermediate fib projection zone. Anytime you get to these key zones, you have to watch for price reactions. So this is the zone that we are watching. It runs from about 281 to 289.50. Now this is a weekly chart, so we have a monthly, weekly, daily, 2-hour. I'm looking at directional moves that are lasting anywhere from a few weeks to several weeks, even months at a time. So that is the focus of FedEx. What would change the overall directional bias and require reevaluation of the in-play analysis would be a close below this intermediate minor 61.8 fib. So if we got a daily close below that, that would require reevaluation. It right now sits around 244.40. Okay, that's our look at FedEx. Next up is going to be the natural gas ETF. So we initially reviewed that on 11.6, currently going to review it again here on 12.4. It was on our bullish watch list. So let's plug UNG into our charts. All right, so with UNG, obviously it was in a downtrend for even a couple years here, but what we identified in the short term is there were some meaningful changes starting to happen, and you can see these high-low markers, and these high-low markers are indicating the weekly high lows. And you can see how we've traced out here higher highs for the most part over the last several weeks. Again, we initially reviewed this on 11.6, so we've seen a really nice move here in UNG over the course of the last 4 weeks, and it has reached both of our projection zones. So this one, for the most part, has been completely satisfied in terms of the projections, and it still overall is in directional bias. Short-term directional bias is positive, and on the weekly chart, you can see that the reversal scout is firmly positive, and our slim ribbon recently on the weekly chart, which is a less sensitive indicator, has gone neutral. So what this suggests is that on a pullback into support zones, watch for those near-term or short-term momentum indicators or confirmation indicators to turn back up, and then that would likely signal another move to the upside. So what are a few of those? Well, on the 2-hour chart, you'd look for both the slim ribbon and the reversal scout to turn positive. On the daily chart, we watch for our slim ribbon PO. It's a projection oscillator integrated into our slim ribbon momentum indicator. And so what we end up with is a way to measure when a dominant momentum trend becomes either overbought or oversold. And then within the confines of the overall dominant condition, you get a continuation signal. So there was a couple of these nice continuation signals. This one was great as it shot right up. The first one came into the slim ribbon here. Had a little head fake back down to the downside, but really did no technical damage.
Here comes a trade idea from Arvi. He's going to bring you his great analysis in Raytheon, and you're going to see the potential positive trade setup here. So that's what he brings you, is his great multiple time frame analysis on RTX.
This is an askSlim trade idea video walkthrough for a short-term long in Raytheon Technologies. It is December 4th, 2025. So the first thing I want to highlight is actually the sector ETF that is tied to Raytheon that we follow, and that is the ITA, which is the iShares US Aerospace and Defense ETF. So let's first look at that one. Okay, so this is the ITA. On the intermediate term, you can see that there is a trough that is actually due to form here, 1117 to about 126. This is a bullish right-hand translation to where we have used most of this cycle rallying. It's leaving a short window of time for a pullback. That's this right here. And the highest odds are once this low forms, you would see a move back towards this old high and then higher, likely in time, over right around 221. Okay, so that's what it is showing us on the intermediate term time frame. On the short-term time frame, we have a low that is due here, a trough that is also due, and you can see a little bit of a higher low, and this is now starting to curl back to the upside. 208 to around 211.20 is the 50 to the 61.8 fib. Then we have the 78.6 up around 215.42. If we go ahead now and hop over to what's happening in RTX itself, okay, so this is Raytheon. Let's go ahead and pull this up here. You can see that there's a low that is due 11.17 to 112 as well. This is an earnings gap here. This is all actually in the gap. This is a gap and then flag into that trough. This old high is at 181.31, just as we said in the ITA. We'll be looking for this low to form shortly, and then for this to move through that old high there. If we go ahead and hop over now to the short term, you will see our actual trade idea. There is a really clean flag forming after earnings. I am waiting for a move over right around 174. If it can close over that on a daily basis, that would say that this has formed the short-term trough. You will see that there is something similar to a double star morning star also trying to form here, not exactly but close to that. If it moves over 174 on a closing basis and then moves back through this low, which is as of now at 168.65, that would invalidate this bullish idea. And on the upside, I'm looking for a move towards the 78.6 at 178 and the old highs at 181. Okay, so that is the overall setup here for this trade idea. Now, what I want to do is go ahead and show you the askSlim MCM, which is the market conditions monitor. Again, this has over 350 stocks on this list, and you can track changes in bias across all of these different time frames. So for a short-term time frame, I'm going to go ahead and pop over the ETFs section of this drop down, right? And you can sort by name. Okay, and we'll go over to the ITA and see all of the ETFs that we have on this list. So this is the ITA. The short-term trading bias has now shifted up to neutral as of 12/4 this morning. So some improvements are starting to come underway in terms of what is obviously bullish right now. You can see that the ITB is clearly bullish. If we keep going down, the IGV, the IBB, obviously those are all bullish. The JETS, Jets is also very, very bullish. The IYT, so on and so forth. You can see this whole list. So you can easily filter also by trade setup condition to see what is very bullish and what is very bearish, right? So this can really help you to understand where those core money flows are moving. Okay, so that's our look there at the askSlim MCM. And this is our setup here in RTX. Again, we are waiting for a move over 174. If it can actually close over 174, that would set up for a move back to the upside. Okay, so that's a look there at RTX. If you guys have any questions, please feel free to let us know. Thank you again. Have a great day.
All right, I'm going to bring you stock market information and a potential market surprise. There'll be a bond market warning here, and we're going to look at the bond market. That's TNX, which are the 10-year yields, TLT, which is the 20-year ETF. We're going to look at the Bloomberg Commodity Index because this is really giving a warning. Despite anything that you see here on the PCE deflator and all of this talk about there is no inflation or that tariffs are not bringing inflation, I'm going to show you something different. And then I'll bring you the stock market analysis looking at the equal weight RSP and the S&P 500. But first, you must read this slide because this tells you about how we do our analysis, about you using the analysis that we provide or anybody sharing analysis that you use, and the important aspect of trade ownership. You must own your own trades if you want to be successful in the financial markets. Before we get to the stock market analysis, however, this is our holiday membership specials. Special rates on 3-month memberships, non-recurring. What this means is that you can give this gift of 3 months and it won't renew. If whoever you give it to then wants to stay on, well, we'll make another special for them and then they can stay on. So you can give the gift to someone you know who loves trading, somebody who loves technical analysis, or give the gift to yourself. It's great for first-time members, and you can use this special to try a higher level if you are already a member. So like if you're a level 1 member and you want to try level 2 or level 3, well, you buy it for yourself, and then when it's over with, you can either take advantage of another special or automatically go back down to the membership level that you were before. So it's really easy, non-recurring, and you get a bonus gift. It includes, we send you an Amazon gift card. So this is really an unbelievable special that we run. We only run this at this time of the year. There's no way to experience the vastness of what we bring you and the type of analysis. There's no better way than to take advantage of our holiday special. Here's the example, level 2 holiday special offer. You get 35% off. So it's only $38.25 per month for 3 months. It's $114.75 versus $59 a month. And if you sign up for this, we're going to send you a $20 Amazon gift card. So that takes a little bit of the bite out of just spending $114.75. If you do a level 3 membership, well, that's only $232, so that's $77.33 a month. You get so much for this. Well, we're going to send you a $50 Amazon gift card. And for level 4, our special holiday offer, 35% off. That's $303.75. It's only $101 a month. You get all of our live charts to put up on the TOS platform. Everything that we do, there's just so much you're going to get here. And that's a special deal at $101.25 a month for 3 months. And then we're going to give you $100 back. We'll send you a $100 gift card. So it's so good. It's unbelievable. And of course, level 4 includes our Market Condition Monitor Pro, MCM Pro, which Arvi showed you earlier in the Market Week show when he did his analysis. So just absolutely an unbelievable deal. Just go to the askSlim.com website. Go to the top right side over here where you see holiday specials. You can click on that, get all the information. The sign-up links are right there. And, of course, write to Matt at askSlim.com if you have any questions about this absolutely fantastic holiday special. Stock market for the week. Okay, here we are. Here's our market brief. Well, stocks are strong with a focus on the December 9th to 10th FOMC meeting. That's coming next week. Analysts lean towards a 25.25% rate cut. Powell might show restraint because of the oncoming dovishness of the appointments that are likely to be coming as Powell's time is coming up here, and the president wants a much more dovish Fed, one that he can control. So he's going to flood the zone. He already has Besant out there who is just simply out there spewing the president's desires, and Hassett, who looks like he's going to pick, is a perfect inflationary combo with Besant. So no matter what anybody is saying about the potential for inflation, these two can easily be inflation pushers. As if there were complaints about government spending and government debt from the previous administration, well, these guys aren't slowing down on that at all. So are interest rates going down with the potential for 3 cuts in 2026 as expected? I say no. And is inflation coming down, setting up easier conditions? I say no. I'm going to show you some of that in analysis going forward. For the week, well, the metals are mostly stronger. Silver and copper had very big gains. Silver got very close to $60. I have been buying silver for years, and somehow when they get this strong, you say to yourself, did I really buy enough? Well, I'm happy to have what I have, silver and gold. And gold and platinum, well, they're stalling here. We saw silver and copper as the stronger ones. Gold and platinum have not convinced me of any kind of a breakout yet, and we certainly may get into a corrective period ahead before these things can storm any higher. But overall, silver and copper still looking really good. AI stocks, well, they rebounded after having some pretty big declines, and several, in my opinion, are very damaged. Amazon, Microsoft, Meta, Nvidia, Oracle, these are bad-looking charts. Yeah, they had rallies, they had big pullbacks. Everybody may think that's an opportunity, but these charts are setting up dangerously. Some AI stocks are still strong, however. Google, Broadcom, they look really good. MU, that's a Micron, well, not really an AI stock, but it's certainly a tech stock in the semiconductor category. That one looks really strong. So some still looking strong, but some are very damaged. And for this market to keep going up, it's going to have to find buying in the other 400 and something stocks that weren't really in the focus. But when I show you the RSP, that's the equal weight analysis coming up, you'll see that, well, they've done just fine. So anybody who says that the other 400 and something stocks were left behind, well, that isn't true, and I'll show you that chart. Stock indexes for the week, well, they're slightly higher. The Friday PCE came out in line at 0.3. And that really helps as the stock market moved up sharply on that news, figuring that, well, that means there's no threat to the Fed because they look at the PCE. And that means that the rate cut is more likely to come on this next coming week. For the week, it looks like we have gains now of about 0.6% to 1.2%, depending on which index you look at, as the stock market moves up very close to what were the all-time highs before it had about a 6% pullback on the indexes and then moved up. If you remember when I started giving the analysis for the correction we thought was coming, I thought it would be at least 6%, but I thought the potential would be for 10 or 11%. Well, certainly that is not happening, as the correction, in my opinion, has ended, and I'll show you what these things look like as we move forward. So that is the market brief for this week. Now we're going to take a look at the charts. There's, in my opinion, a bond market warning and a potential market surprise. Now, all of this talk about interest rates going down, well, the last couple times the Fed cut rates, interest rates went up. Yeah, short-term rates go down because that's what the Fed can control, but then the stock market was pricing in more inflation and the longer rates went up. So we're going to look at this important analysis of the TNX, which is the 10-year yield, TLT, which is the 20-year ETF for the treasuries, and we're going to look at the Bloomberg Commodity Index, which is really speaking volumes. And then we'll take a look at the stock market, the RSP, the SPX, and then we'll move into looking at our rankings application, which is fantastic for levels 3 and 4. So that's what I'm setting up in here, looking at this analysis. So let's start out first looking at some analysis in the bond market. So this is the TNX, the 10-year yields. It has some amazing cyclicality in here. Cyclicality means that there is a rhythm in it, in how the market moves. And that can be a real tip-off, of course, for traders and investors. So this is the weekly chart. Now I'm going back here to the very end of 2021. Look at the magnificent rhythms that are in this market. Now on the bottom here are the cycle brackets. That's just a drawing tool, and we use that to help us as a guide for the rhythms in the market. These vertical timelines in here show you where the actual cycle lows were, and you see what we do is we draw them in the most current cycles, and then as you get further back, because there's a natural drift in cycles, sometimes we call it shift, but it's a drift, then when you go further back, they don't align. But you get the idea that there's a very, very consistent rhythm in here. This cycle right there, as you can see, as all of them are made up of two minor cycles, so we call this a harmonic family. These are the harmonics in the rhythms in the market, which is sounds a lot like music, doesn't it? Well, this certainly makes music. And look at this, going back into 2023, back over here, there is this massive wedge that's forming, a pennant. And if you look here at, the bottom of each of these cycles, it got down here where it started forming that pennant. Here it got down over here, down towards the bottom of the pennant. And it's doing the exact same thing right over here. And when these bottoms form and you get into the rising phases, you can see that interest rates pop Big upside move there, big upside move there, big upside move there. When you look at this and you see this bottom that's getting ready to form right in here, and I'll take a closer look for you, then you could say, uh-oh, what's going on? Well, all of this talk about interest rates going down, I say that's a bunch of bullcrap. This looks to me like interest rates are going up, and that the bond market is going to begin to factor in massive borrowing from the government, massive borrowing needs from corporations, especially those involved in AI and data centers, and look at the inverted head and shoulders that's beginning to form in here, as you can see. So that points to a bottom being formed in here in this time frame. You can see these vertical lines that we put in there, and that you can see right here interest rates beginning to go up. Remember, this is 10-year yields that we're looking at, which is inverse to the bond market. This looks to me like rates are going up. No matter what anybody says, I wholeheartedly believe. Now, if this moved up a little bit in here and all of a sudden we had a move to the downside, and then this was this level over here was broken, then that would say to me, if it got underneath, let's say 3.94%, that this is aborted, and that all of this talk of lower rates will be true. Right now, it looks to me like all of the talk of lower rates is wrong, and that interest rates are actually going up. And of course, we see the commodity markets, silver, gold, all of those metals moving up strongly. And there are other commodities that are still looking weak and need some bottoming. Specifically, oil, I think, is going to go lower still a little bit for some number of weeks. But we're starting to set up a commodity move to the upside that I think is significant. I'll show you that. But this is the interest rate bottom being formed in here. If I look at the daily chart right over here, you could see, again, there are beautiful rhythms in this market, and the bottom was formed right over here, and getting up near this high right over there at about 4.16%, that would really be a breakout. And you can see the upward projections that are in here that are projecting just in the next couple of weeks getting up to 4.2% to 4.28% maybe. So this is, again, looking at the weekly and daily comparison right in here. There's the weekly bottom being formed in the inverted head and shoulders. This is how it looks on the daily. The rising phase here, the rising phase here that has not been shy. There is definitely an upside move going in the interest rates there. This says to me interest rates are going higher. If that's the case, I should be able to show you some pending breakdowns in the Treasury markets. Let's look at TLT right over here, and I'm going to show you as I blow up the weekly pattern right there that while that wedge or pennant was being formed, what's happened in here is that this has moved sideways to lower in the TLTs. So let's just move this out of the way and put this in, and look what's happened in here. So we have this, look at this dominant cycle. It's made up of some minor cycles right in here. When they were both coming down together, TLT got hit very hard. I mean, it came here from just close to 102 all the way down over here to about 85. I mean, that's a huge decline as interest rates spiked. So you had 1, 2, 3 minor cycles. 1, 2, 3 minor cycles. The third one has already broken down. Look what happened here when the third one broke down. You got that big breakdown right into the perfect timing. Look what's happening here on this weekly chart. This says interest rates likely to keep going up into March as the TLT points to the downside. We're just getting the breakdown right over here. This looks to me, and you could see the momentum condition here as we look at our reversal scout as that turns negative. That says to me interest rates are going up, that the Treasury market is going down. Remember, they are inverse to each other. Let's take a look over here as we look at the daily chart, And you could see, look at this breakdown right over here. It's pretty easy to take this and project it down to the weekly support here, or even coming down to that last major low down over here. And that would make the next trough, I'm just going to move this over for you to see, somewhere in this period right over there in January. And then the one after that, pointing out to February, this looks like a stair-step down movement coming in here in the Treasury market. We had this note here for our members, sell pending. Well, it didn't actually get up into the sell zone or hold up long enough, so it wasn't really ideal because it's even more negative, as you can see in here. Look over here as you had positive to neutral readings on your option bias indicator, and here is where it turned negative and said keep your positions biased to the short side. Here you could see where the slim ribbon PO was giving you long side signals right there. Well, it gave you some short side signals here that were good, and now it's turned negative right over there. And if we get a little upside blip in here, it's going to take some rally to get this to where it gives you another sell signal. But this is negative, this is negative, this is negative. The breakdown is negative, and all of that says that treasuries are going down. No matter what this, background news is about the Fed and all that, I think that the markets are telling us something different. And this could be a big shock to the stock market if actually they find out that, this super dovish Fed that is likely to be put in place is bad for the bond market. And that's what I think is an important message in here. I don't like Bessent being picked in his role. He was a smart guy. The same thing for Hassett. These are smart guys, but they are now going to do Trump's bidding, and that is extending out this massive spending and massive debt, and tariffs are not going to save it. And all of this that he says about giving $2,000 per person back from tariffs or no income tax, it's all crap. None of that can happen because the tariffs are only going to bring in $200 billion in the next year. And if you give away $2,000 to everybody who would qualify, you'd be giving out $600+ billion right there. You get rid of income taxes, you have to have a VAT tax that is 20% or more. So none of that can happen and none of it can pass. And interest rates really look like they're going up. Did I make my case to you? I hope so. So now we're going to move on and we'll look at the commodity index, BCOM. And if you think that there is no inflation, look at this magnificent saucer bottom that formed in here. Look at the cycle rhythms that are in here. Please go to the top of our website where it says workshops. Click on Cycle Analysis Workshop. There's a free video there. You can learn all about this style of analysis. And what this was showing was that there was a low due right over here. You see those lines? And then this is likely to go up right over here and then give you some kind of a little pullback that would happen right in here. And that would mean that following that in April, there'd be another upside move there. I'm just following what I'm looking at here. And you could see the downside move in commodities here, the saucer bottom, the bottom formed, the upside move, the breakout right over here above those resistance levels. And now we have all of these commodities pointing to the upside. Energy is 29% of this. Energy didn't even make its bottom yet. Yeah, natural gas is strong. Oil probably has another month or so before it makes its bottom. Grains are just bottoming. We've seen precious metals. They're super strong. Industrial metals, super strong. The softs, well, they're kind of coming on. Livestock, well, we've just got some high price in beef out there. None of this is going away. We have a situation where we have a very inflationary condition potentially. And that is in alignment with what I'm telling you about interest rates going up. Our Fed, the government, flooding the zone with all of this money that they contend is going to be out there, and all that is going to do is raise interest rates and then eventually bring a deflationary wave because everything goes down. And when the stock market starts to fall and fall hard, then interest rates will begin to pull back. But in the meantime, this says to me we're having an upside move in the commodity market. Look at this incredible cyclicality. as each of these cycles, these are called right-hand translations, turned up to the upside very significantly. This tells you, and has been telling you, and I've been telling our members, that commodity prices are going up. We could really be in the beginning of a commodity boom in here. That will last for a long period of time. So you could see the BCOM. This is available I keep this updated on our chart grids that we share with members. So I wanted to show you that. So now let's move into the stock market, which of course is at very, very near the all-time highs. All of the discussion, of course, is that the AI stocks have led the way. They've been the ones that have been responsible for the upside move. But look at this, and you can see that the equal weighted stocks, the RSP, this is the other 490 stocks. They're at the all-time highs. We actually had a breakout today where it went up there. So any of this talk about, well, it's all AI, it's crap, because this is the equal weighted. And the whole market has moved up. So, it's not like they've ignored this. Right now, we're getting strength coming from the small caps. That's helped lead the way back up here. But overall, the breadth has been improved. And we can see that as we've seen the Russell do better. I'm not going to show you the Russell today. We're going to stay on the S&P 500, but you can see that. Now, what are these arrows? Well, I'm showing you in here that when you get into these rising phases right over here, you get strength. And in this case, this rising phase was this 37-week cycle right over there. The 13 and the 26, that really pushed on the upside. Here you can see the same thing. There was a little bit of fight from the 37, and you could see that pullback right over there. This is how even out of phase cycles align. And we'll find out about the strength of that 37 week as we start to move into the early part of 2026. But you can see strength right in here. This cycle, a right-hand translation. In other words, it peaked way on the right side. It says you're going to keep going to the upside. The same thing here. Same thing here. But it made a left-hand translation. What does that mean? The cycle peaked on the left side over here. It broke this cycle support. What did that say? It would decline all the way into this timing here. Bullseye. Spot on. You can see that. My analysis here was that it would come down one more time in testing here, and I was proven wrong on that as the market had a V-bottom and moved sharply up. Here's your right-hand translation again. That says that this rally right over here we're in would make a new high. Well, it just did. Now the question is how high and for how long? Don't really know. We've got on the equal weights right over here a target of 198 to potentially 203. That's still a long way up. It's something like 4, 5, 6% on the upside, which is potential into the early part of next year. Now see this cycle right over here. I've been talking about a decline into the third week or so of December. So this is in alignment with it, a potential pullback in here, but not a breakdown. If it would break this level, well, forget about it. It's in really bad shape if that were to happen. But we're not really anticipating that now. Let's take a look here at the daily chart. Look at this beautiful analysis. Now, I've put in the Hurst envelopes in here so you can get a real good idea as to how these cycles shape up. And this was a little double top in here. This was that corrective period into mid-November. That's this one right over here where it made that cycle low on the weekly chart. And now here's what we're looking at. This is where you get that 37-week dip down over here. But that's a buy pending area because this is very likely to form bullishly and then move again over here into early part of the year. But this is that dip into third or fourth week of December. Yes, that would be not in line with favorable seasonality, but I've got to go with what I see as the rhythms that are here in the market, the money flowing in, the money flowing out. And I think we're going to, got up into this area here. We'll get a little period of money flowing out, and that's likely going to give us a buying opportunity for short-term traders. So I wanted to show you how this looks looking at this rising phase right over here. you can see, and how that sets up on the daily chart is each of these cycles on the daily chart live inside of this rising phase here on the weekly chart. This is how multiple time frame analysis speaks to you. And you can see that once this moved up right in here and got past the, well, I took it out of there, but the 78.6%, that gave us a warning that this had repaired. This is the upside turn in momentum right over here. It tells us these cycles have bottomed. And now the only thing we're looking at is this dip right in here and potentially right in here. And I'm going to show you on our ranking system how you can see what that timing is on a lot of stocks. Let's take a look here at SPX, the S&P 500. And here you can see this is very much in alignment. Actually, this did not break out where RSP did, got through that high level. And you can see I'm pointing to, this is really the range that we've been in here for about more than 3 months, and maybe we pull back in here. See this little faint line? That would be that 37-week average that we're looking at. Then, come back up in here as we would expect into the early part of the year, making new highs. That's the S&P 500 weekly, as this now is very much supported, telling us with the upturn in here that early November, that mid-November low was the trough in here on the early side, and then probably going to get a little pullback in here there. And then after that's over with, then moving up to new highs into next year. So looking for a Christmas rally, I think it's going to be sometime just before Christmas to New Year's is where I think that would align pretty well. So that's a look at the SPX on the weekly. Here it is on the daily, and you can see in here that this cycle clearly made its bottom, and we were looking at that 17-bar Russell. That really disappeared, and the Russell now merged with the other indexes. So that's just faint in there, and we'll be removing that because that is no longer affecting the market. And you can see the upturn in here. This was the first negative readings we had in like 6 months, but then it flipped back and turned positive as everything did right in here, again warning us that November correction was over and the market is likely to move up to new highs. Now, if you look at this cycle pattern in here, I'm just going to duplicate that. And this kind of shows us that somewhere in here will be that dip in towards Christmas. And then what we get in here is the next move up there into the early part of next year. So that's how I would project this. This is really looking like a positive pattern. And our analysis has to be that we're going to see the market move up to new highs into the early part of next year. My big picture analysis coming at the end of the year is going to show you a bear market next year, but we're going to get to new highs first. I mean, this is pretty clear. The only way that could change is if this low goes. That would be that low right over there at 65.2192 right there. If that was broken right at that level on the SPX and broke the downside of this range, that would give us a significant warning that the top is in place. In the meantime, everything that we're looking at, the sum of the evidence says that the stock market may pull back into December, but then likely will be moving up to new highs in January, potentially February of next year. So that's a look at the S&P 500. I want to take you now to the rankings system. Let me just get these slides in order. And this is our ranking system. So this is just an amazing application that our level 3 and 4 members get. And what this looks at is the most popular traded symbols. That's the most popular ETFs, all the high flyers, the widely held, and the best optionable stocks. That's one of the important reasons that I wanted to build that, and why I built the OBI that you can see right over there. So you can scan here on directional bias, in other words, which are the strongest, which are the weakest, or market outlook. Let's just take a look at the market outlook right over here. And you can see if I look at this, it will scroll to very bullish or very bearish. Let's look at directional bias right over here to the very bullish ones. And you can see right over there the ones that are bullish and very bullish. Let's look at the directional bias here. and you can see the ones that are very bearish and bearish right there. What this does is it builds the algorithms off of long-term, intermediate, and short-term, and then gives us a narrative. And here it tells us, like Netflix, it's very bearish. It says technical analysis favors the short side. Well, we got a big bounce here as they're likely to be buying out Warner. And but this tells us, well, it's likely to fail in here. The intermediate at N3 means that we're in the most negative cycle phasing. That's what that means that you see right over there. And here on the OBI, it's N3. It says keep your options positions biased to the short side or long side, in that case, the short side. I clicked on OBI there, and you can see the ones that are N3 right over here, the most negative, and you can just scroll down right over here, and that will help you see which of the OBI are most negative. The ones that are orange, P1 orange, means it's so strong on the upside, it's become overbought. You could see bullish overbought right over there. It says technical analysis favors the downside short term, and that it's a positive intermediate condition. So you'd probably be looking to buy natural gas on a pullback, something similar in here for the corn market. So, or if you want to go down to the most bearish stocks right at the bottom of this, well, let me just click on OBI right over there. And we'll get the red ones to show up. And this shows you right in here, technical for Baidu or Baba, they're the same, which is technical analysis favors waiting on a short-term signal for the most favorable setup because it is neutral to slightly bearish. So, it tells you when there's something setting up and tells you when there's not. This is so good, it's unbelievable. Now, when, if I look at the, I'm just going to reset the view right in here. That might take a second. If, I talked about a lot of the stock market pulling back into the third week of December, let's look at the cycle analysis only. This is so good, it's unbelievable. And we can then scroll down and see which of these stocks look like the daily patterns are likely to pull back into December. Look at Apple. That says 1223 is the next dominant low. That's the average range to come down and make a bottom in here. And you can look at Applied Materials, 1217, AMD is 1222, and you can see that it gives you all of this key timing on many of these stocks. Broadcom 1217, Boeing 1230. All of these say there could be pullbacks back into December as you see that. So, and of course, if you wanted to see our charts on any of these, you could go here. You could look at the Apple chart, and you could see that's the weekly chart right over there. And if you wanted to see the daily chart, well, that's the daily chart right over there. So these are updated all the time. This is so much information. It's just incredible. So, and of course, you could search on a specific symbol in there, and that would then give you the ability to just look at the ones that you're interested in. This is the ranking system. How do you use it best for you? Well, let's see on the bottom right here. There I am. That's Slim AI. It will talk to you if you start a call with it, and it talks in my voice. And you can use that if you're not a member. Even the greeter on the front page of the site will do that with you. But I'm just going to ask it. Looking at the rankings system, what are the top 5 ways a member can use this? And it's going, I'm going to send it up there, and it's going to think for a second. And by the way, it refers to me as Steve right over there. That will give you an answer right in here because it knows me, because I'm logged in as me. And it says you can monitor market intervals, you can focus on the leadership stocks, confirm the timing of trades, filter out the noise in the markets, adjust your risk management. You could ask it anything about trading in the markets, and it's going to have an answer for you. That's Slim AI. And so anytime you're looking at one of our applications as a member, you can ask about it, and it will really help you with that. That is a look at our ranking system, which is just absolutely phenomenal. And that is everything I'm going to show you in the analysis today. I kind of went a long way on this, but I hope that information I shared with you is fantastic. Don't forget, take advantage of our holiday specials, where you give the gift in a non-recurring membership, and we send you back a gift of an Amazon gift card. If you're new, get acquainted. Go to the top of our website to the free stuff and sign up for the SIR Lite. This is free daily analysis in the stock market. Check out that Slim AI on all of our web pages and ask questions, any kind of questions about the markets. Remember, if you're a member and you want to know anything about the analysis, you must upload a chart to it. It can read charts 2-3 at a time and really see our analysis on there. It's amazing. YouTube, subscribe to our channel, click the notification bell, like the video, give it a thumbs up. On X, follow us at askSlim. And anything that you have a question on, our holiday specials, our all of our applications or our content, huge offerings of education and analysis, write to Matt at askSlim.com. That's it. I want you to be so careful because it's so crazy out there. And I'm always wishing you great trading.
Well, I'm going to